Hey traders, welcome to another episode of Charts and Coffee. I think we're good to go here. Oh, there we are. All right. Welcome to the episode of Charts and Coffee. Yes, the markets are not really open all day. I know the stock markets are closed, but futures markets are open and Forex markets only close 2 days in terms of holidays a year. So yeah, I'm definitely going to be taking a look at some charts. I'm going to be plugging my trades into Wingman Tracker today and doing a little look back and research on our sector secrets mastery trades. I'm going to be creating some chart books. So absolutely, I engage Mondays, even when there's a holiday, as an opportunity to prepare for the week. So thanks as always for joining me. I see you got some diehards here. Excellent. Love it. Love it. All right. Where are we on our audio? Okay, let's see if we can. There we go. Okay, or our video, I should say. Okay, there we go. We're good. Great to see everybody. Happy Monday, Martin Luther King Day. Again, I think the futures markets close midday. Stock market is closed. But remember, the futures markets, the indices, will give us a little bit of insight into what type of risk sentiment we're getting out of Asia, out of Europe, out of the UK. And also we'll get an idea of, what we want to do to begin the week. So, look, I love this. I always said, joke with my husband, I was a grumpy woman on Saturdays when we were dating. He's like, what's the matter? I'm like a dragon slayer with no dragons. I've got nothing to do, which was exceedingly unhealthy. I'll figure that balance out one day. Fast forward almost three, we started dating when I was 20. So yeah. Fast forward a lot of decades. Oh my gosh. Anyway, so let's get to it. One of the things that I'm going to be hoping to start doing in 2021, we're kind of wrapping up January, but I would really like to have some more thematic type conversations. So we'll definitely cover the Q&A as we always have in these, but I definitely want to have some themes for an episode so that if you guys want to say, hey, Rog, when did you talk about the advantage of trends and the importance of trends, or what was that episode you talked about, the trade tracking software you use, etc. So I'm hoping to do something like that, maybe starting in February, having specific themes. All right. So with that being said, let's jump on over to daily charts. Got a few questions, and I believe the first one is, hey there, Kim. All right. So one of our regulars, good to see you, Kim. Penn, sure. All right, take a look at Penn there. And all right, so when I look at Penn, a couple things you want to be aware of is the proximity to the earnings. So my opportunistic window, my favorite window for any kind of ramp up into earnings, and this would definitely qualify as that. So we want to start 6 weeks back. So 42 days before earnings. If I missed look, it's not like I missed the window. I can't look at it 5 weeks out, 4 weeks out, 3 weeks out, 2 weeks out. Absolutely. But I'll start my scan preferably with uptrending markets, double green markets that are 4 to 6 weeks from earnings. The cutoff is around 2 weeks. And the reason for that cutoff is because once you get closer and closer to earnings, the price of the options the assumption here is that you're buying, but the price of the options get more and more expensive. And if you're long options, if it's a debit directional trade in front of earnings, the potential for IV crush is there. But here's how we avoid it. I don't trade through earnings. Would I buy a pullback here? Yes. So all that means, Kim, is for me, I've got to be out. Take a look before the market. So I've got to be out by the 3rd of February. So that means I've got to be out by the close that Wednesday. All right. So other than that, yeah, I'm totally fine with it. But I'd also like to know, because we use ETFs, and gang, if you're not using sort of the sector mindset, if you're not thinking relative outperformance, and the easiest way to do that is ETFs and indices, make sure that you're not ignoring, make sure that you're keenly aware of where your stock, your favorite stocks are sitting in this sector ETF driven trading world and investing world that we live in now. Okay. But thanks for the question, Kim. Good stuff. I like the structure. So yeah, I like that a lot. Next up is, hey there, Pablo. Good to see you. BLI. All right. BLI, not so much, Pablo. So what is the key to everything I do? What is the key to my feeling that the trades that I take are higher probability over time, that if I stick with a certain process, it's going to pan out? And that process is always going to start with the underlying structure of the market. I can hardly call this a downtrend, but I can't call it a really healthy uptrend either. It's very choppy with certainly a bias to the upside. That being said, if you have a choppy market indicator, Pablo, go for it. Find an oversold support zone, engage it. But I wouldn't put Berkeley Light near the top of my list, not because it may not make a great move. It absolutely might. You know, one of the things, and maybe we'll do it in some time in the future, but one of the things I like to see when a market compresses, and this is a compressed market, yellow 34 EMA wave reading, blue grab candles, whether they're cyan or the blue, whatever shade of blue. One of the things that I like to see is the market being compressed. It can be compressed between volume and profile. It can be compressed within Darvis. It could be compressed within the wave. That's a really compressed market. It can be compressed within some standard deviations of the volume weighted average price, or it could be compressed, it could be squeezed by the VWAP, the volume weighted average price lines, which means you've got to drop more than one. But yeah, other than that, I'd have to say I would exhaust all the higher probability double greens. And then I might put BLI near the top of the list, because as compressed markets waiting for an expansion go, that would be a pretty good one. Sure. Nike, right back to the structure that I will tell you is going to be higher probability more often than not. And by the way, we're on the Thinkorswim charts this morning. I've been using the Trading View charts quite a bit. Oh, so we got a different mug today, new mug. This is Release the Kraken mug. And what are we doing today? We're doing some Ethiopian roast, medium roast, which is actually one of my favorites. But yeah, I love this mug. It's a little menacing looking though, isn't it? Release the Kraken. That's the kind of mood I'm in. So fair warning. Anyway, Nike. Yeah, I like the pullback on Nike. 34 EMA wave. I mean, look at this structure. Yeah, absolutely. And then look, I keep harping on knowing where, gang, there's two kinds of traders that are going to start 2021. Two kinds. Ones that are going to continue to look for one-off stock picks, find whatever the flavor of the day, the month, whatever Robinhood's trading, whatever's popular at IBD. By the way, Robinhood, IBD lists, same thing. Same thing. We kind of make fun of the Robinhooders, but before Robinhood, and not to insult anybody, before Robinhood had these curated lists that we were keeping an eye on, there was IBD, same thing. So these widely followed curated lists. Well, those can be twitchy lists. How about focusing on the lists that are curated by folks moving the money about, right? There's two kinds of traders that are going to trade in 2021. The ones that understand the impact of these curated lists by these ETFs, these widely traded, growing in popularity. The popularity of ETFs has been just absolutely heading higher since 08, gang. Use it to your advantage. And the other kind of trader is going to be the one looking for, whatever the trade of the day, trade of the week, whatever they're talking about on financial media. Always after the momentum move, when it's gone parabolic, chasing the market higher. Hey, some of them do just fine too, right? I'm not saying you can't do well either way, but you really want to focus on the former, using these sectors, these ETFs, these indices, these pre-curated lists that folks have already chosen are important. When I say folks, I'm talking people with the money. I won't call them smart money. They've got the money. They're moving around the size. And then again, notice how everything that we're doing is representing price, of course, right? But also volume, size, right? Where is the size happening? So keep that in mind. I love Nike. XLY, which is the ETF that Nike is in, one of my favorites. XLY is also heavily weighted within the NASDAQ and the S&P, but really heavily weighted within that NAS. All right, so next up is, did I already enter Nike? Yes, I do have an entry in Nike. Am I going to look to enter tomorrow? Yeah, possibly, depending on the momentum. Eric, yeah, possibly depending on the momentum. How about Shop? Lucas, how about Shop? I do like Shop. Shop's been an interesting. I might. What is the name of the guy who's the CEO of Shopify? Is it Toby? What is his name? Toby Lipke? Yeah, I'm a huge fan. Smart, sharp guy. Anyways, I like the structure. I like the pullback of Nike. And if I have something similar on Shop, not as clean a trend, but we have a pullback. We are just getting to the 34 EMA on the high. So is it as pretty as Nike? No. Is it the same type of strategy that I will use as Nike? Absolutely. Yeah, absolutely. So again, we're always looking for, Nike is probably a really good example of sort of this idea that we have of trend compounding. In other words, again, is the stock going up, and is the group that is going up with healthy? And if you get that combination, you just basically compounded the trend. So Shop, I would want to go look to see besides Shop, are there other names that are trading with Shop that makes sense to trade, right? So is there a relative outperformer? That's another part of this idea of this trend compounding, taking an idea of following the trend, which is the basis of everything I do, and then seeing if we can't leverage that, if we can't really compound that. So let's see. Shop, where would I look? I'm trying to think about how we could compare what else. So if I'm going to look for Shop, now let's do this together. I have the main ETF in mind, but I'm wondering if there's any smaller ETFs. I mean, for example, CLOU is the one that comes to mind. So, clearly my first stop to understand Shop and what it's hanging out with is CLOU. But I'm wondering if there's anything else that's actually kind of interesting. And I don't think that there is, that has liquidity. I don't think there is. And when I mean liquidity, I mean that larger group has to have good volume. So if I take a look here at CLOU, Shop's probably going to be one of the better names. I'd keep an eye on Twilio, PFPT, ZS. Zscaler was one that I liked the look of a lot and ended up missing it by a little bit at two spots. I'll let you guys see where I missed it. I missed it at this spot right here, at the 8 and at the waves. So I probably wasn't really wasn't looking at a lot of CLOUs. Zscaler is a good name. Zscaler, whatever. It's a good name. I really would keep an eye on that. And so, yeah, Shop's a good one, Lucas. So that's the process. So you would just basically at that point sort of compounded the trend, right? Trend compounding, right? Let's see here. What's next? 6A. Oh, thank you for the futures question. Thank you for the futures question. We love the US dollar short. Gang, I know the dollar got real froggy last week, a little jumpy and green. Good for it. We're going to sell that. We're going to sell that. Now, where do we sell that? As long as that US dollar keeps heading higher, we need to focus. We need to focus on places where the other currency that we're going to short dollars against is bullish. So that means we're focusing on Australian dollar, New Zealand dollar, Canadian dollar, pound, and euro, not the franc, not the yen. Okay, really important to distinguish between what has contrast, in other words, strength in the other currency, and weakness in the US dollar. So please, please, please keep that in mind. But yeah, absolutely. So we're going into the 21 EMA. 6A is fine. Options on 6A are great. FXA, the currency share ETF, also a really good alternative, as of course would be the Aussie versus US Forex. So thanks for the question. Hey there, Trisha. Oh, so the CCI, the stochastic, I don't use that as much. So the indicator you're referring to is this one, right? So the 20-period CCI, a 12/26/9 MACD histogram, and a 21K 3D slow stochastic have sort of been staples for me for 3 different entries. One is one I call the wave reversal, where I use the CCI to confirm the reversal. MACD is for breakouts from compressed markets, and a stochastic is an overbought, oversold. So each one, and by the way, in using the label, the trade flag, I don't have to keep the indicator in the subchart. I don't have to keep the indicator down in this area, taking up valuable price action real estate and taking up real estate from my history of the JT trend or my V-score. So I keep them because all I need is the reading. I'm not looking for hooks and patterns and other such things in those indicators. I just want to know what their readings are. So that's what they're for. Do I use them that much? I mean, I probably use the slow stochastic the most in choppy markets for overbought, oversold. CCI is more of an intraday tool for those wave reversals. So that's why they're there. That's why they're there. Do I need them on the chart? I really don't, because none of these tools actually are required. See, these 3, so I'm glad you asked. So these 3 are for the smaller part of my trading life, which is really pretty negligible. The smaller part of my trading life where I'm not double green, trend following, swing trading, looking for a way to compound the trend with understanding what's happening with the broader ETF and the individual stocks placed within that ETF. So thanks for the question. All right, next up, good stuff. All right, how are you on time? All right, so next up is, hang on here. Is it better to day trade sector ETF or high volume stocks within? So Andres, I'll look for both. Starbucks, Kamal, I like very much. McDonald's, no. And well, McDonald's could be an oversold buy, but BABA, I would leave alone. A few folks have asked me about BABA. Oversold buy means, near these previous lows in the 200 EMA, that could be an oversold buy. Starbucks has been really good to us, generally speaking. Even though it's yellow right now, you can see it spent most of its time double green. And BABA you're going to have to wait for a reversal. I am very not interested in BABA as a general rule, but we have completed a 1, 2, 3. Love Freeport-McMoRan and copper. Mark, yep. Love Freeport-McMoRan and copper. So thanks for your question, Kamal. Appreciate that. And then there we go. Freeport-McMoRan and copper. Love that. Yeah, Freeport-McMoRan pulls back with copper. I will buy some not FXC, FCX. Yeah, so Freeport-McMoRan tends to trend with HG futures, which are copper futures. Snap, sure. Yeah, Snap was on my radar last week. It still is on my radar. It's funny. This is where bias kicks in, and I'm not saying this is a good thing. I think Snap is a ridiculous product. It trading at $51 is mind-boggling. But you might say, Rag, what does that have to do with anything? And you're right. It has nothing to do with nothing. But it's funny how it permeates. It permeates and then it starts to influence my analysis. But is it a buy? Yes. It sure isn't a short. I'm not going to go short it because I think the app is ridiculous and the company's what the heck are they doing? Whatever Snap does, Instagram's going to rob, and TikTok's outdoing them. But having said that, it's a buy, and it certainly shows my ignorance of this particular stock, because I'm sure they're doing something right. They've been launching higher since the end of October, but it is a pullback buy zone, especially near the bottom line of the wave and the value area low for January. Sure. Tesla. What's a day if we don't talk about Tesla, right? Pullback buys, gang, all the way. Double green pullback buys, 100%. And you talk about trend compounding here. You talk about where Tesla's weighted. You talk about who's buying Tesla. This might be one of the most trend compounded stocks we can actually think about. What do I mean by that? Again, who is buying it? Where is the weighting? Where are we assured that active fund managers and even passive ETFs like your QQQ and your XLY are going to continue to have to buy this as the markets move higher? That's what I mean. So yeah, you talk about, Tesla is probably one of the most compounded in that regard. So yeah, love the narrative behind it. Just don't buy it at highs. All right, let me take a couple more questions and then we're going to call it. Dorothy. Hey there, Dorothy. Dorothy says, hey, my evening webinar. Yeah, what was it? Last Wednesday. You mentioned, and what was for those of you that might want the replay, there it is. So what was the question here? You mentioned that I typically didn't start out with a vertical. No, I do not start out with verticals. I absolutely do not. I leg into them. In other words, I will start with what I believe is step one of building a vertical. And that is getting long the call, if it's a call vertical, clearly. But I would get long the option, which is really the directional foundation of the trade and really the side of the trade that we're hoping to profit from, right? That's another thing to think about. And then I teach in the mastery, and really anytime I teach options, which is always know which leg of the option that you're looking to profit from, because usually one leg is there as a safety net or as a cost offset or as a potential loss offset, but the other leg of the option or legs of the option are there to in some way either give you the credit that you're hoping you'll be able to retain most of, or give you a debit that you think is going to, start to accelerate in value. So always know the difference between the leg of the trade that's there to protect you and the leg of the trade that's there that you're designing the trade around to benefit from. By the way, the idea that options traders can somehow be outside market trend preferences, can somehow just be neutral. Here's the joke on neutral option strategy traders. You need a neutral market. The idea that somehow options can circumvent directional bias in the markets is one of the reasons where a lot of options traders get absolutely mauled by trends, especially when they think they're going to start putting on income-based strategies. You've got to know the difference. Anyways, I digress. That does go back to the heart of the question, which is how do you build a call vertical? So if you don't want to add the credit leg, you're absolutely right, Dorothy. Think about the job of the credit leg in the role of a call vertical. It is there to offset loss and cost, mostly LOSS and COST, loss and or cost. Why would someone put on, let's use that Tesla example from Chris earlier. If I'm going to go in Tesla, Booking, Amazon, Google, those are expensive options. So a lot of times what traders do is they'll either focus on the put credit spread or they'll focus on the call vertical. Both are excellent ideas and expensive options. So in the case of the call vertical, what's the job of the option that you're selling? It's to offset potential loss and cost. It's an expensive thing, but I'll still recommend scaling in, which sort of begs the question, if the whole trade strategy is designed around making something affordable or making it cost less, if we're wrong, the one question a lot of traders don't ask is, aren't there any other symbols less expensive and ETF that we could use? So that's the first criteria, knowing why you're doing it. The second criteria is a price movement. I need a certain amount of price movement back in the favor of making the credit something I can collect more on. Yeah, more premium for. Because remember, am I going to collect a lot of premium on a call when the market's heading lower? No, but I will be able to pick it up cheap buying the call. So the flip side is when I want to think about writing the premium. So thanks for the question. And by the way, I do not believe ever in being short. So you can't leg into a put credit spread. You can log into a call vertical. So I do not ever recommend selling options and not having a safety net. Ever. I do not leg into credits. You can leg into debits all day long. All right. So thank you for the question on that, Dorothy. And that's the mindset for that. So Dorothy, I'll add that. Yeah, think about the timing on your debit, and then the tougher question that needs a little bit of sort of trading maturity, which is, gosh, should I even be trading this? I know Tesla's taking off or booking or whatever that sexy name is. Is it appropriate for my account? And that's market money math. That's understanding the basics of the risk to your account for the only question that really truly matters, which is, what's it going to cost if I'm wrong? How much is this going to hurt me? Is it beyond the threshold? I don't mind paper cuts, right? But I mean, am I going to lose a finger on this one? That's what you have to think about, Always orient your trading plan first answering the question of, can I afford it? Is the risk something I can take on? All right. Okay. So, all right, gang, I ran over a little bit, but thanks for joining me on this Monday. I'm going to get to some homework. I'm going to be plugging in my trades into Wingman Tracker, doing a little research on my last 2.5 months of trading for one of the services that I do, the Sector Secrets Mastery, and also be plugging in my futures trades. Now, I do this every week, but about once a quarter. Today I have a nice day off, so I thought, let's do a little bit more of a deep dive. But I try to do this once a week and then once a month. So some of these trades I've already gone over with a lot of detail. But use a day like today. I mean, I will tell you, I'm obsessed with that movie Tenet, Tenet. Obsessed with it, love it. I'm gonna put that on, and I'm just gonna do some of my homework that I would normally reserve to the weekend, but I'll just take advantage of today, capture some charts and study previous trades. Take advantage of that. Maybe put in an hour, put in an hour of that kind of work today and then go enjoy the rest of your day. Yeah. All right. Okay, gang. Have a great one. Thanks as always for being a part of our Charts and Coffee crew. Release the Kraken. I'll talk to y'all tomorrow, 9 a.m. Be good.